Good morning, good morning, good morning. Welcome back, everyone. We are doing a new follow-up video on Dogecoin today. We have previous videos on this on the past, and this was requested from one of our viewers to do a follow-up since we have kind of come back into the area of where we were looking for Doge to actually come to on the worst case scenario of the lows. It actually just tapped into the last wick and took that liquidity. Last time it did something like this was right over here where it taps the liquidity and then has a little dead cat bounce, tap the liquidity, dead cat bounce, tap the liquidity, and then reversal. Usually 3 drives is what I like to see, and we kind of have the 3 drives right now. So anything else from this level trying to take the liquidity of this low is going to be pretty much very short, uh, like a swing failure pattern situation. I don't think it goes much lower than 17, 18 cents, and that's even like asking for it by other assets also falling down into that level. I don't think like Doge is uh, the one that's getting hated on in the market. It's actually Ethereum, and as Ethereum gets sucked away, so do a lot of the altcoins market cap. So just be aware of that. That Bitcoin is officially under 90,000. We've discussed what will happen under 90,000, and now ETH at 2483. Uh, Being under that $2,600 support is not a good sign. So now what I'm gonna do is turn on the drawings. And before we get the drawings going on from the last videos, guys, please, anyone who's watching this video who has not subscribed to the channel already, I would greatly appreciate it. I really would greatly appreciate it if you sub to the channel. Please like the video so the YouTube algorithm starts sharing it. Leave me a comment below letting me know how I'm doing. If you have any questions or concerns, also let me know on the below. And if you would like to trade with me live, feel free to join me on the Discord server. Link to the server is in the description of this video below, alongside all the other affiliate services that we use and recommend that helps the channel grow. So thank you guys so much. And now let's get back into it. As you can see, I'm going to turn on the drawings from our last video. We had a lot of stuff going on, but we knew that around 19 and a half cents was a very major support level. It is the neckline of the head and shoulder that we had, and as long as we're above this level, the measured move was to be played out, which it did. Now that we're coming back into the neckline, this is actually a good buying opportunity for upside continuation if you have the stomach to take the trade on this consolidational pattern. Now, what I'm going to do is I'm going to start zooming in, and I'm going to start showing you a daily. But as of right now, unless this week we close underneath 21 cents and 21.2 cents, unless we close underneath it, I am saying that we are possibly putting in a local low, and we should be looking for upside continuation, reversion to the mean trade around 27 cents. And it's probably going to come to like, let's just say 24 and a half for now is where we should at least expect that level to get tested before a rejection to go lower, if that's going to occur. Okay, now everything that accumulated actually got the markup, so we can't assume it's uptrending. It's actually downtrending right now, and what we're trying to do is find out when the downtrend will take a pause and reverse, and that's the area we're trying to long and accumulate for the next upside push. Now, what I'm going to do is this doodle here, looking for this deep grab here. I'm going to actually delete all this nonsense. This is, excuse me, those are consolidational fibs from like previous videos. So this now, I don't expect the consolidation to come into this low underneath 15 to 18. I am expecting it to get tested this range right here. And actually, I would say right there. I do not expect Doge to go underneath this level. And that is basically my hope that it does not, because it can. But if it does not, then I will say that this is a bullish uptrend in the making. This reversal has failed, and now that resistance has flipped to support, so I'd be looking like this. Okay, if worst case scenario you get it to 15.5, it's a buying opportunity. I don't even want to see it get to that level because right now it's doing very good. above this little accumulation zone, because if you look left, that's where everything was fantastically done. And as long as we hold above this 18 cent level, I would say that a rounding bottom will occur right around here, and then we will see a reversal up. And then the second you're back above 22 and change, that's when the next measured move will probably play out from this range right here. And that will be something like this is what we should be expecting, around 36 cents. Okay, so how long will that take? Well, someone in our video like 2 videos ago was like upset that it didn't play out in like a day or something. So let me give you a measurement. This is a 231-day consolidational range that is possible for it to play out. Now, will it take that whole time? No, usually it takes 70% of the time. Here is another bottom consolidation. This took 105 days. Let me give you another one. Another 161 days. So what does that tell you? You got almost 2 to 3 months of sideways consolidation coming, and that is the accumulation, and that is also the spots where everyone who's over leveraged will get chopped and pushed out in this range. But this range is your sweet spot. This is where you want to accumulate, and I'm gonna go one time frame lower, and there you go. Between 18 and I want to say, yeah, man, like between 18 and this fib 22 is where I would accumulate. And the second we get above 25, I would start taking profit between 25 and 28 and a change. So yeah, because this whole thing, people are probably pooping their pants, but it's a bull flag in my opinion. This is a clear, clear, clear bull flag, descending channel, whatever you want to call it. I really don't care. The point of the matter is that it's a consolidational pattern, and it is basically squeezing price action down into a channel, and then once the channel hits its like consolidational like maturity, which is like 70%, you know, people like to say 70%, 70%, that's when the breakout occurred. I'm gonna do it like this, like that. I'm gonna delete the silly doodle because I like to keep everything nice and clean like this. And yeah, so this chart, what I just did, can you see the range now? How it's consolidating up and down? How this dashed line is support. Okay, that's where you made this little head and shoulder. Here's your support, and it was trying to hold the support, and it broke support on this head and shoulder. Here's your measured move, exactly to the head and shoulder. Then you did it again, distribution, head and shoulder, straight down. Doge is so mean. And then you had a nice little accumulation and a markup phase right back to the top. So here's your accumulation. And soon you will see the markup phase. And this time, hopefully, you're gonna only make a triangle above this 28-cent range, and you will actually expand wedge out of this, because here is your inverse head and shoulder. Do you see it? It's gonna be the Quasimodo shoulder here, and then the upside. So that's what you have in store long term, if you can understand what's going on in the short term and not get pushed out in this consolidation, because this is probably the best area for you to be looking to buy with risk under 18.5 managed. Remember I said 18.5, not 18.8. So that's kind of how I would go about playing this asset moving forward. I'm going to try to take a quick doodle picture for the team. Let's go one step out. Yeah, I know that the chart is like completely doodled up. Yeah, so it's hard to even kind of show you guys the stuff I'm trying to show you. Eventually, when this bottom is placed, I'll be pulling new fibs and stuff. But this is, I think, where the accumulation is occurring, guys. Just full disclosure, I don't want to BS you. I think this is where Doge is basically getting accumulated for the next push up. That's why I'm long on ETH. I actually bought ETH at like 2400-ish, something like that. So, and I did take profit. I mean, my ETH position is up like 1500%, guys. So I don't want you guys to try to chase that. I did it yesterday because I saw the reversal coming in. So yeah, aside from that, guys, if you have any questions or concerns, hit me up in the comment section below. If you want to go see my screenshots of my like 1400% gain, feel free to check out the Discord server. The link to the server is in the description of this video below, alongside all the other affiliate services that we use and recommend that helps the channel grow. And if you are a trader, I highly recommend you using our MEXC link in the description of this video below. That's where I do all my trading and scalping. That's one of my favorite exchanges because of the fees. It's the cheapest fees available, and you get to have the exact same fees as me as if you use the link below. And those are where all my screenshots are coming from. It's from MEXC. Also, MEXC allows you to have 400x leverage, which I regularly use because I know how to use leverage to my advantage. So why would I risk my margin and my capital on a trade that I know is going to be winning if I can use their leverage? And that's exactly what I did. I took an oversized leverage trade with 400x margin. I mean 400x leverage, and then when I was up like I think 600%, I cut half of the trade, took half of profit, took the margin out. I switched to completely cross 400x, basically letting the trade run on the profit. So right now the trade is running with a stop loss in profit, and it's on free money. So whatever else money it gets before it gets stopped out is just extra capital I get to use for my next trade. But I took out 600% gain and my original. I only have like 20% of the original position running, and it's purely profit. Like it's running on the profit that I made. I'm not gonna risk my hard-earned money, but I will. I will take the money that I took from whoever the hell traded against me, and I took the money from the exchange due to the funding rate that I gotta pay because I'm borrowing their leverage. But yeah, aside from that, like, why would I risk my own payroll money when I can, quickly take a scalp, take my original out, and let the profit do the rest for me? So that's the kind of stuff that I teach you guys in the Discord. If you guys want to learn how to do straddling and managing risk, basically position sizing. There was another member that we had. His name was Cut Corners. He huge XRP fan. He's probably the one who dislikes my XRP analysis videos. But while he was with me in the last stages of him being with me, he finally got a routine of how he takes his trades. He formulated a system like, oh, I will not take more than 1% risk. I will let my trades run. He was taking trades on different time frames, like, oh, he's got a trade on a monthly, he's got a trade on a weekly, we'll trade on a daily, a trade on a 4 hour, then he's scalping 15 minutes. All of that work, just it's good, it's great, and all that. But the point I'm trying to get at is opportunity cost. It's a lot of micromanagement of stuff that, like, how are you gonna live a life? How are you gonna get away from the screen and spend your money? As a trader, you are in front of the screen all day, every day, and like you're making this money, but you're destroying your health. You're sitting in a computer all day. You're stressing. When you're looking at the chart and you're like stressing, that cortisol is like the killer. You're literally just like producing fight or flight syndrome hormones, which are literally killing you because you're staring at the chart and like stressing. So don't do that. And everyone does it. So don't get me wrong. I've been in, people who know me, I've been in trades. Like, I've been in $100,000 plus trades of my own money. And I was up almost 5 days in a row because it was an over leveraged $100,000 trade. And I took leverage. So it was like 7+ figures. I was trading $1 million with $100,000 liquid capital. And yeah, I was up 4 or 5 days in a row. My wife was not happy. No one around me was happy. I felt like absolute death. I could not sleep. When my wife went to bed and I went to bed with her, I would have my cell phone and I would be staring at my cell phone all freaking night. And then if like a little bit of a move happened, since my margin was completely maxed out, since my leverage was completely maxed out, and since my liquidation level was like $100 away from what the current price was, and this was on Bitcoin, I was watching the whole damn time, and yeah, at the end of the day, I got out of that trade after a whole week plus, and it literally was almost like a break-even trade. I think I made like $50 or $100. It was something so insignificant that I was like, I'll never have this happen to me again. The funny thing is, almost every 4 years, every bull run cycle, there's a part in the bull run where we take out the lows and everyone's in panic mode, and then it reverses up to the upside. Every bull run, I get trapped on the support, like ETH 2600 support, ETH 3200 support. I would be trapped with an over leveraged long on one of those supports, and then I would flip short. As since we're under those levels, I'll flip short, and then all of a sudden we get this giga mega short squeeze rise, and I would get trapped, and I would be eating that rise for almost like a week. I would have to be trapped again on the opposite side a whole week. And then finally, when it consolidates back down, I was able to get out. And this is how I learned all these consolidational things, is because I would be short right here. I would get trapped in my short and it would go all the way up here. Back in the first bull run, this would be a complete loss. Second bull run, I learned how to straddle hedge. So I would be having a long here and a short here. And when the long would go up here, I would close the long. But keep in mind, you're in a straddle. So once you close the long, the profit, you take it. But then you have to add to your short because your short entry is here. So when I close my long and wherever I close it, I add to my short. So my short average comes up, okay, quickly. And then I can scalp another long and then create a mini range of where I'm straddled. And then once the long is basically matured, when I come to this point, I'm like, okay, hey, now I know, like, yo, this is a distributional top, like I know how to look for these now. So when I get these distributional tops, expanding wedge break to the downside, here's another head and shoulder, but this is where I think the third drive is going to reverse because of this wick. So I'm not looking for the continuation to the downside. I'm looking for the reversal here. But the point I'm trying to get at is I would let my long scalp go and I would hold that short almost for like a week or 2 weeks or whatever long it took. Once the drop actually came back to test where we originally broke out from, that's when I would get out of it. And the whole time I would be scalping the opposite side while holding this short against me. Like, now I've matured even more. I don't do this nonsense with straddles. I can see the trend direction and I can just trade in one direction because I know the market maker is not just trading in the day. He's painting a chart for you for like a week or two. That's why when I do these YouTube videos, that you see me actually do a longer term time frame. You can see a little bit better like this than you can see what's going on like this. This just looks bull, 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 right? Like, oh, it's a bull flag. Yeah, we can break up, blah, 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 blah. Okay, cool. That's if you even look at a daily chart. So good job if you look at it daily. Weekly actually is telling me the exact same thing. We are at the support that I was looking for. So that's good. Like, now I can say, okay, let's go to a 4-hour time frame, or some of you guys are trading even like lower than that, like hourly, or even lower than that. Like some of you guys are trading on 15-minute and stuff. So now that I got confirmation on my higher time frames, like yes, I'm looking for this pivot here on the lower time frame with our doodles, you can see that we're right here on the 21-cent EMA, and that yellow EMA is actually a good harbinger of support. Now on the hourly, you can also see you have a nice little head and shoulder over here, right? So if you took a long here, your risk is only to this level here. Your stop loss would be like right there at 20 cents. If this does mature to the upside, you have a move from here at 21 cents all the way to 24 cents. and that's going to be the short squeeze. And then over here, it can start making another head and shoulder to go down again. And this time, if it goes down again, it will take out the liquidity probably of that. The likelihood of that liquidity getting taken out after taking out all the liquidity of the shorts is likely that, yes, the longs also get punished into a deeper support level and then reversal. So, and that makes sense because look, this wick, did we test it? Oh yeah, we did take the liquidity out of it. Okay, cool. So that's if you reject here. Since we took this liquidity, I don't think we're gonna go back down. I do think that this is setting up a short squeeze in my opinion, all the way probably to 25 cents, maybe even to the dashed channel line that we already have drawn out up to 26 and a half. So I hope this video helps, guys. I'm kind of just like rambling at this point, so I'm gonna let you guys go, and I will see you guys in the next video. Have a great day. Talk to you soon. Please don't forget to like, subscribe, press the bell button for notifications, thumbs up the video, share the video with others, and in the comment section below, let me know what's the next coin you guys want me to do a video on, and I will get it. Thank you guys so much. Have a great day, and talk to you soon. Bye-bye.